Hey guys, Doug the Retirement Guy here. First off, I want to say thank you for each and every one of you who've subscribed to our channel. The numbers is continuously climbing high. We appreciate it. If you like what we're doing, man, give us that thumbs up. And best of all, if you can support the channel, down in our description, we have a new Patreon link. Click on that. $1, $2, $5. Buy us a Coke. Keeps the channel going, keeps supporting the channel, trying to give you this information as properly and as often as we can. Today that we have a great one. We have 3 ETF funds that pay 12.3% dividend on average. You could have your own retirement account with just these 3, or you could have a nice addition to your retirement account. Let's get into that today. So a goal of a retirement account is, one, you want investments to grow. You always want your investments to have a growth pattern moving forward, because if you're giving up value, you're really not getting anything out of your retirement fund. The second thing is you want income from your investments. Basically, bottom line is you want money to live off of. So if you can take and get 3, 4, 5, 12% from your money, you could actually live off your money and never touch your principal. And the third thing is you want to relax and be worry-free. You want to basically be out there traveling, relaxing, enjoying life. You've worked hard, you deserve it. That's what you want from a retirement account. So picks of our ETFs that we said, hey, this is where we want to be. Well, 1, we want to make sure we have some growth. 2, we definitely want some income. And 3, we want to make sure our risk factors are pretty much in line to where we want them to be. So our first ETF has a growth rate of 0.47%. Now I know that's not huge, but it pays a 10.99% dividend. And it's a 52 rating on the Morningstar. They put that as an aggressive. Our second ETF pays 0.71% growth, but pays a 12.61% income level with an 88 aggressive Morningstar rating. And our third fund that we have found for you has a 6.81% growth. So as you can see, we have a total combination of the 3 funds to give us some solid growth, pays a 13.46%, and is only a 44 aggressive rating from Morningstar. So across the board, guys, we have an average of 2.66 growth rate, right where you want it to be, a 12.61% average on income, and a 61 rating on Morningstar, which they say is aggressive. So let's take a retirement fund of $500,000, which is very common in today's market. So what we want to look at first off is the ETF fund. If the numbers hold tight to as we're reporting it, the growth would be $783 and your income would be $18,316. The second ETF fund that we're going to use will give you a growth of $1,183 and an income of $21,016 a year. And finally, our third ETF, $11,350 of growth, a $22,433 a year, for a total growth of $13,316 a year and income of $61,766. I think this achieves every one of the goals that we have established, and that we have given you an income that someone could comfortably live on with $500,000 in the bank. Let's tell the truth. Our first ETF is JP Morgan Premium Income ETF, call sign JEPQ. JEPQ seeks to deliver monthly distributable income from the NASDAQ 100. These are the 100 of the top companies on NASDAQ that they're trading for. They will be writing out of the money call options to seek the income from the monthly operation. So they're writing covered calls basically on the top 100. So it keeps your volatility down, it keeps things smooth, and they're making income from it. When we put this into our 12-month calculator, and we took the $500,000 and broke it across each one of the ETFs equally, we found that the JP Morgan had a growth from year to year, from 2024 to 2025, of 0.47% or $778. Now the dividend income came in at $18,002 or 10.8%, a little bit lower than what was originally reported off of their sheets. Now, the big thing for safety. This fund has been active since May of 2022. That's almost 3 years. So it has a good track record. It has a positive track record showing that it can continue to do these kind of things. And the other thing we like about it, the expense rate is only 0.35%. So that means more of your money is going to work than going into JP Morgan's pocket. Our next ETF in our package is VanEck Mortgage REIT Income ETF, or MORT. The VanEck Mortgage REIT basically is seeking to copy, cover, perform as the MVIS, the U.S. Mortgage REIT Index, basically, which is the one that tracks all of the U.S. mortgages, real estates, investment trusts across the board. They basically are cloning, if for a better word to put this, if we were saying we wanted to clone the S&P 500, that's what they would be doing. But this one does it on the U.S. mortgage real estate investments. They're cloning that, which is the top end. Again, we put that into our calculator, a 1-year return. In 1 year, they were able to put out the 0.71% or $1,187 return on that investment. The dividend, $21,371 or 12.82%. So again, nice, slow, steady growth with a nice positive dividend income each and every month. Now again, this fund has been out for almost 14 years. So 2011 is when they established, 14 years of doing this, and you can look at the track history and find that, yes, these guys are able to produce as close as possible to that U.S. real estate mortgage market. And the other positive is their fees are only 0.43%. So again, your money is working hard into these funds versus paying big expensive fees to an ETF. Final one of our ETF is Penn Park Investment Corporation, or PNNT. Now, PNNT is a publicly traded company, and they are basically offering forms of debt and non-controlling equity financing to mid-sized companies. So think of this as a bank for the mid-sized companies who are too big to get the investments from the bigger markets and too big for a regular local bank. If we take this and look at, again, 1 year out, this is where you're generating the cash. The stock increase is 6.81% or $11,358. They paid, in our category, they paid 14.22% dividend or $23,703 over that 1 year. This fund has been out for over 18 years. So again, all of our funds have solid history behind them and have been able to produce and continue these numbers year after year. The next thing is the Penn Park has 0 expense fees. So our retirement fund of $500,000 JEPQ, again, is $18,002 a year in income or $778 in growth. MORT, which is our mortgage side of it, paying $21,371 a year or $1,187 in growth. And then PNNT, $11,358 in growth and $23,703 a year in income, to give us a total, guys, of $13,323 or 2.6% growth of our fund, and an operating income of $63,077.83. That's a 12.61% return. And now the nice thing about this is such a balanced fund. You have finance and credit. You have mortgages, which is the housing market. And then you have the top 100 companies from the NASDAQ. So we have the big technology that's out there. We have mortgages, and then we have business that's growing. So it's a great cover across the board. That's why we can get an equal number of income with a good solid growth. So a summary of a retirement account: 1, we said we want investment growth, and we did at 2.66%. Income from your investments: yep, you want money, we give it to you at 12.61%. And you want to relax and be worry-free? Well, of course, we want you that too. That's why we come out and give you $63,077.83 of income from a $500,000 investment. I think we have accomplished everything that we've asked for in a retirement account. So I really do think we did it. Guys, if you like what we're doing here, I'm telling you, just give us a thumbs up. It's the simplest thing to do to help the channel. Give us that thumbs up. Also, don't be afraid to hit that subscribe button. You're loving the videos that we're giving you, just make sure you're seeing all of them, because we're constantly adding new and new videos as we find more and more information out there, especially for the retirement party. Best of all, leave a comment. You like what we're doing? You don't like what you're doing? You agree or disagree? Don't worry about it. Put it in a comment. Tell us what you think. We will respond, good, bad, or ugly. And our final one, if you can support the channel, Patreon does a great job for the channel. Gives us that little extra boost to keep things going, keep those sodas going, keep the caffeine rolling so we can keep putting these numbers together. Well, this is Doug, the Retirement Guy, and I want to say thank you to each and every one of you for watching these videos. And again, hopefully you have fun into retirement.